What is going on, investors? Hopefully you guys are doing well out there. It is finally Friday, and that means it's finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, which got a giant boost. A little bit of it got priced in. When we look at Amazon, we look at NVIDIA, they got their bump last week. But when the Federal Reserve officially cut rates this week, boy, you saw a big boost, including the stock we always kick things off with, and that is Meta Platforms. So the week at 519, I believe we made a new fresh 52-week high. That's what we were looking for technically. We'll get to that in a moment. We were looking at with Meta, and that's exactly what we got as the shares were up over 8% this week. Finished the week at 561.35. Big move on the stock. Now, Meta and their eyeglass maker, Luxottica brands, they're extending their smart glasses collaboration. You might recall, I think it was a couple of months ago, the two maybe potentially in a rumored deal where Meta would make an equity stake in the company, which I think would actually be wise for Meta. They honestly could probably afford to buy the company outright, but they extended their smart glass collaboration, and we're seeing other social media companies, including Apple to a certain degree, but also Snapchat, releasing their new latest AR glasses called the Spectacles, and they are targeted at developers as well, as they released a Snap OS, which would be a $99 a month fee, not for the users, but actually the developers. And I got to look at these spectacles released by Snapchat. I think these are a little awkward, but this is the form factor we're starting to shrink to. I think at some point, obviously, some of the Ray-Ban glasses that we've seen from Meta, some of the spectacles that Snapchat has released in the past, not necessarily this big, but there's slightly more compute power in here. You're going to be able to access OpenAI. That is very interesting, that OpenAI is getting a deeper integration across more and more devices, obviously with the iPhone coming later this year. So it'll be interesting who, like initially, these companies are probably paying an API access to OpenAI, but in the future, which company races to get OpenAI to pay them? And that kind of could be the arrangement that is happening with Apple. We don't know yet, but at some point we might get the default AI engine, and that is where the big money would come for these companies, including for Meta. Now, Instagram launches some teen accounts with parental control features for your young teenager in your life. I don't know if my sons are not teenagers yet. I don't think, even with parental controls, I don't think I would let them on Instagram, but obviously everybody is free to raise their kids how they feel is best for them. Now, do we have free speech here in the United States? Well, I tell you what, TikTok is going to court, and the irony behind it, a China-based company coming to the United States. In China, apps such as Facebook and Google and other social media companies are essentially banned from the country. Now, with VPNs and those types of things, I do believe they are used there, but for the most part, you probably better watch what you post there. But TikTok operates here in the United States, globally, but here in the United States in particular, and they're going to argue against that U.S. ban. Now, U.S. ban is a headline that is somewhat misleading given the fact that the United States is trying to get them to divest to a United States company, but one that they would approve from a regulatory perspective. I don't think Meta or Google or Amazon or really any of the companies that we talk about on today's show could step in and buy TikTok, at least from a majority perspective. I don't think they would allow that. So we'll see what happens here. This will likely go to the Supreme Court. So we'll have a long drawn out battle there. Moving on to Apple, start of the week at 214 and boom, up over 6% after the company announced their iPhones last week. Finished the week at 228 and some change. Now, the company sank though earlier in this week, and sink is probably a heavy term from a financial website. It moved a little bit on news that iPhone 16 pre-order estimates came in lower than expected. We saw this from multiple outlets saying that the shipments year over year are coming in a little bit light. And I gotta imagine, first of all, the features on the new iPhone, not really anything different. It's not shipping with the AI software. And my understanding is I've got an iPhone here that's probably, I don't know, 3 or 4 years old. I'm guessing I'm going to be able to run the AI software just like anybody else. So there really is no incentive to buy the new phone unless you're getting maybe a carrier subsidy in order to do that. Now, the 16 models are seeing discounts already in China as the AI delay potentially maybe softening demand. I don't think that's that. I think you just have heavy competition in China. You're seeing it from electric vehicles. You're also, I mean, it's across the board in China. You've got heavy domestic competition there. They're very good, obviously, in manufacturing goods, and there's a lot of domestic companies that are doing that on the cell phone side, on the EV side. But I don't think I've ever seen this before, that you've seen the new model already discounted. Now, the company received FDA approval to assess sleep apnea. I believe that is on the watch device. So that is very exciting. They got FDA approval last week, as you recall, to use the AirPods as, I believe, or advertise them as potentially low-cost hearing aids. That is very interesting. Now, the company is likely to unveil new MacBook Pros, iMac computers, and Macintosh mini computers at an October event. So we're probably just a couple of weeks. Typically, they announce these types of things for the holiday season. The big question is somebody like me, I'm sitting on a MacBook here that's probably 3 or 4 years old. It was the first generation of kind of the M1 Ultra chips. I think they're on M3, maybe even M4 Ultra chips at this point. But it is a 15% boost worth forking over $4,000 for a new laptop? Probably not, and I don't think they're going to announce anything that's going to make users do that. Now, moving on to Amazon. Got its big boost last week, but it followed through a little bit this week as shares started at $184 and pushed up another 4% to finish the week, close to $191 per share. Now, there's a new Amazon plan, and it's the workers in the corporate offices are going to have to be there 5 days per week. A lengthy Andy Jassy memo went out. I actually read through the whole thing. I thought it was very interesting. I read through it and I was like, he hasn't told them yet. They had to come back to the office. Well, conveniently enough, Andy Jassy at the end of the email basically told everybody, you are not going to be allowed 3 days a week at the office. It's going to have to be 5. You're going to have an assigned desk. My read from this, and this is from some current Amazon employees, ex-Amazon employees, some commentary that I've read, social networks, those types of things. This is a way for Amazon to basically get rid of 20 to 30% of the staff. That is the plan. You are able to, quote, lay these people off without having to lay them off and offer them severance. It's, hey, you got to come back to the work 5 days a week at the office. They understand that a portion of the audience or a portion of their employees are not going to be willing to do that. So this is a way for Amazon to cut employees. Now, we can all argue if that's the right thing to do, wrong thing to do. We're going to forget about all of that. This is the investor channel. And one thing that I think CEO Andy Jassy has done absolutely fantastic. And I'm not one, as you guys know, if we did a Nike segment, I'm not one to pump up CEOs. If we do an Intel segment, I don't pump up CEOs for free. They certainly don't pay me to do that. Andy Jassy has done an absolutely fantastic job, in my opinion. Cutting costs, shedding expenses, streamlining the business, making the management structure flatter. This is exactly what's needed to be done. And when you look at the financials of Amazon, they continue to get better and better every single quarter. That's exactly what you want if you're a shareholder. Now, the company announced a plan with Intel as they gave a foundry update. We'll talk more about this when we get to the semiconductor segment in NVIDIA, but more on the semiconductor show later this weekend. So links down in the description to our new channel. Subscribe to that, because we'll be talking a ton about Intel and their new deal with Amazon to manufacture AI chips in their foundry, which they plan to segment off and create a subsidiary inside of Intel, separating the two business to a certain degree. I think there'll be a full separation at some point. We'll talk about that. But Amazon probably getting, in my opinion, probably a sweetheart deal here, because Intel needed a customer, needed $1 billion customer. And Amazon is that customer, and my guess is they got a heck of a deal from a pricing perspective. So we'll see how that plays out with Amazon going forward. Now, the Prime Day is coming, folks, just a couple of weeks away. October 8th through the 9th is you are going to have that Prime Day, which tends to break records from a sales perspective over at Amazon. Now, PayPal also getting in on the action, and they're forming a partnership with Amazon Buy with Prime. If you are on websites out there, I tend to use Apple Pay for a lot of things. I still use actually PayPal a fair amount as well. PayPal credit is a great thing. You get like anything over $99, you get 0 months for six months. So it's like if you get 0% 0% interest on a purchase, you might as well take it if you can. Look, they're going to integrate into Amazon with their Buy with Prime. I like some of the changes that PayPal has made. I know we've been critical of the company in the past, but I mean, I think we bottom ticked that one from a technical perspective. I've been bullish on PayPal, I think, the last 2 quarters. Now, Amazon hikes their hourly pay for their frontline employees. This is, we go into a very demanding holiday season. These workers work incredibly hard. Part of the reason why actually Amazon does this as well, in my opinion, is to put pressure on their competitors like Walmart and Target in order to draw people from not working at the competitors' sites. Also puts a lot of pressure on the mom and pop businesses out there, which Amazon basically has had in their sites since day one. Again, we can argue socially, economically from these things, but I'm giving you this perspective of an Amazon shareholder. This is exactly what you want them to do. Now, they unveiled several AI tools to aid small businesses and third-party sellers. These were rather small tools that were kind of somewhat available already on Seller Central. Enhances a couple of things. I noticed on the Amazon shopping app, I do like the AI integration that they have there. I don't know if it's called Alexa on there or maybe they named it something else, but they summarize the reviews. So I was like I was shopping for something on Amazon. And what I liked is now I don't have to read through all the reviews. The AI actually summarizes it. And so I thought they've had some nice integrations there. Amazon incrementally making their product better. Now, the company has identified a key client that has ended its relationship with a company called Progeny. I guess that's how you say it. It is a public company. Ticker symbol PGNOY. It looks like it provides fertility benefits for employees, and they're going to switch to Maven instead. That's probably bearish for a company like that. Now, moving on to Netflix. Start of the week at $6.94, just drifting sideways up to about $701 per share. Not quite 52-week highs, but up about 1% on Netflix. Now, this crossed last Friday. I don't think we touched on it, but the company and BuzzFeed are reportedly in talks to live stream, quote, Hot One show. You'll have to let me know down in the comments what the Hot One show is, but I watched the entire Selling Sunset season, and there's a lot of hot ones on that one. Now, moving on to NVIDIA, start of the week at 115, drifting sideways to 116. That follows, I think, a week where NVIDIA was up over 9% last week. So holding this level actually probably a good thing. Now, NVIDIA and G42 team is going to develop AI solutions for weather forecasting and climate tech. So you're seeing a deeper integration as we move forward with AI. The OpenAIs, the Googles, and these companies that were working on these types of things, they're working on these broad like AGI chatbots to get integration into Snapchat eyeglasses and obviously the Apple iPhone. But I think it's these smaller type of integrations, and we'll put smaller in air quotes, but it's these integrations like weather and healthcare that are actually particularly exciting because these are fresh and new. It's not necessarily just an iteration on a previous like search engine or something like that it's certainly better, but weather forecasting with AI could really transform that business. Now, the AI chip spending must rise. This is key. When you see those people on social media that have been bearish, probably the stock market for the last 4 years, they've probably called 18 out of the last 2 recessions that have actually happened. These people are constantly saying AI's in a bubble, this, that, and the other, but that's all they say. Okay, and maybe one day they'll be right. But the anecdotal evidence and the overwhelming amount of evidence is that these large language models need more and more compute power. They need more and more memory. And those demands are not going up incrementally. They are going up exponentially. And that is going to be the case for this foreseeable future, which is obviously bullish for NVIDIA. Now, BlackRock, Microsoft, and NVIDIA are feeding their own beast as they are launching a $30 billion AI infrastructure fund. This is things like power grids and other types of AI infrastructure that is needed. So interesting that NVIDIA has kind of done this. Okay, they make the product for AI, the key product for AI, or one of the key products. And what they are doing is, you'll see they're investing in all of these different companies. They're bringing bringing BlackRock. They're basically kind of funneling business back into their own ecosystem. Some people will say this could be nefarious, but I don't think they understand the ecosystem as well as maybe others do. Now, NVIDIA is in discussions to acquire Octo AI for $165 million. $165 million to NVIDIA is like $2 to you and I. Octo AI sells software for customers to use and make their artificial intelligence models run in a more efficient manner. My guess is NVIDIA has seen clients use this to optimize AI models, and they said, hey, we could roll this up into our CUDA software platform. Now, NVIDIA-backed Japanese AI startup is going to be valued at a $1.5 billion valuation after raising $200 million. NVIDIA continues to back these, we'll put it in air quotes, kind of smaller. At the original valuation might have been a couple $100 million, and because of NVIDIA's support, not only financial, but more importantly, from giving them allocation to these high-powered GPUs, well, these companies see big benefit. And one of the prime examples of that is CoreWeave. After the company is mulling selling shares of its privately held valuation at $23 billion. I think we've numerous times come here on the show and talked about how in May they were valued at $19 billion. Last December, not even a year ago, they were valued at $7 billion. So their valuation has increased threefold, largely because NVIDIA has allocated to CoreWeave even over and above other AI software makers or AI service providers like Amazon, which has forced Amazon into manufacturing their own chips and partnering with Intel. Moving on to Microsoft, start of the week at 431. Up just fractionally, up about 1%, finished the week at 435. Now, in the middle of the night, I think this happened, but you got a pay raise. 10.7% increase on that dividend. This is why you love these companies that pay that dividend and the growing. Out of all of these companies, I think Google's starting to pay a dividend. That'll rapidly grow. Meta's paying a dividend. That's going to rapidly grow. Apple continues to do it. I think they could be a little more aggressive than they've had in the past, but maybe that's something that they do in the future. You also got an authorized $60 billion buyback, but it had no timeline. Sometimes when you see these buybacks, it can be accelerated. Sometimes they accelerate them over the next 6 months or 12 months. There was no timetable for the buyback, so it's just kind of open-ended. So we'll have to see when we look at their financials, the pace that they appear to be on. Now, the company revealed Copilot Pages, and they're integrating more AI into their flagship products. Essentially what this is this a wave 2 of Copilot? So Copilot released, I believe, this time last year, maybe a couple of months after, maybe it was in the fourth quarter of last year. It rolled out initially, I think, to select Microsoft Office users and enterprises, and now it's kind of broadly or widely available, where they're continuing to obviously integrate and innovate on top of that. And you have wave 2. And this is seen as a key catalyst by Wells Fargo, as this wave 2 could force more enterprise customers that are paying per seat to raise the price that they pay per seat because of this integration. Now, OpenAI, as we've talked about for the past couple of weeks, they're looking to raise big amounts of cash to the tune of about $6.5 billion. And that is apparently in its final stages, and an investor list should be finalized. And we should know if NVIDIA, Apple, other companies, including Microsoft, maybe upping their stake in the AI maker. We'll get a list of that very soon. One company and one individual that's probably not going to be in that investing round is Mr. Elon Musk. His electric vehicle car company started the week at 224, up big time, up 6%. I think over the last month, it's about 6%. Over the past 6 months, though, you've had a great ride with Tesla, up over 35%. The House of Representatives votes in favor to repeal EPA emission rules. And so this is kind of the big thing. We're rolling, obviously, into an election cycle. And if you get in the comment sections and you want to talk politics, all I ask is don't repeat Republican National Committee, DNC, and RNC talking points. Create your own talking points. We all know what these big political organizations like to tell us and want us to say. Your job as a voter and an investor, more specifically, is digest what the RNC and the DNC is telling you and then actually start to make some conclusions. What we can conclude is if the House of Representatives and more importantly the Senate align in one political party, and my read is it has a bigger odds of going to the Republican side. Now obviously it would depend on who's president because they might not sign these types of things, but if you have a clean sweep of the White House, the Senate, and the U.S. House of Representatives, these EPA rules will likely get changed, probably negligible impact, in my opinion, on Tesla. Now, the company's upcoming robo-taxi event is really having everybody guessing. They're doing a very good job at Tesla, kind of keeping everything hush up. Now, I think some of the rise that we've had in the share prices, some of it has to do with interest rates, okay? Lower interest rates, you can afford a $40,000, $50,000, $100,000 Tesla a hell of a lot easier than when the interest rates are obviously high. But some of it has to do with this robotaxi event. Now, will they be able to deliver? That is the key. We are just like probably 3 weeks away from this event. I am going to be eagerly watching it. I will likely pen up a newsletter as well. Links to that is in the description below, and we'll see what happens. Now, electric vehicle demand, though, in Europe starting to slide during August. I think this has a little bit to do with a little bit of EV fatigue. People that have wanted to buy an EV have already bought some. You have slightly lower oil prices, depending on where you live, maybe not necessarily here in California, but largely oil prices have certainly stabilized, if not gone down. And also on top of that, interest rates and the fact that a lot of these EVs relatively expensive. The industry is going to have to do more to encourage people to buy those vehicles. Let's move over to the technical segment of the show. And we talked about this last week, guys. A little bit of editing there popped us to the chart we're trying to look at. The S&P 500. We said this last week. We were like, we want to push to a new high on the S&P 500 because there were people, if you move this chart over here, I had like 18 people in my Twitter suggested feed being like, oh, double top on the S&P 500. It's over. Well, this is why you wait for the pattern to actually confirm itself. That is not now a double top. That is actually a confirmed new higher high, folks. Anybody that has been calling for the demise of the stock market has been so wrong. It's been almost embarrassing. We just confirmed a new higher high on the S&P 500. That likely means pullbacks are coming. They might not be very deep. In fact, if we look at the pullbacks, really since early this year, they have actually not even got back to the middle of the channel. This is as strong as an uptrend as I recall, particularly maybe dating back to, the post-COVID surge was interesting. This is probably even more interesting considering we're moving now into a rate cut cycle and you have a strong, strong upper trend line here. Needless to say, the trend is your friend until it bends at the end. You were waiting for a confirmed higher high on Meta. Boom, we did that. Higher high on Meta. Pullbacks in Meta can be bought. It's not quite the same with Apple, but I think given where the rest of the market is, you can give them credit. This isn't a new, fresh, higher high. But again, you're at the top of the channel, so you'd expect some resistance. You would expect some selling pressure up at this level. The fact that you haven't violently kind of reversed course with Apple certainly supports what the S&P 500 broader markets are doing. This stock is looking absolutely beautiful. Also, speaking of looking beautiful, is Amazon trending back to the middle of the channel. We had a brief test of this bottom channel. Pull up the chart of Nike. You'll see a very similar thing. You rarely get to touch the bottom of these channels. Now, this is a shorter term channel. We've touched it 4 times since January of 2023. And here we are making our way back to the middle of the channel. You should have some selling pressure with Amazon as you get back into the $200 price range. Netflix is just chilling at basically its all-time high, consolidating here, likely waiting for earnings. You'll get earnings from Netflix probably the 3rd week or maybe even the 2nd week of October. So this stock is probably going to chill out until then. NVIDIA still working off what I would consider this purple channel line. Now, I understand in weeks past, we've had these longer term trend lines in NVIDIA. That is still intact, but I think with NVIDIA more specifically, you have to look at that trend line really since October of 2022. That is still intact. In fact, if you wanted to, you could draw like kind of a top channel line on this. I mean, we are still in this channel. You're actually at the bottom of the channel. In the shorter term, you can buy NVIDIA. If you do that, you wouldn't want to see shares get below 90. So you're risking about 20 to make a new high up here at about 160. You're risking 20 to make 50, at least in the shorter term with NVIDIA. Google had a very nice reversal out of the middle of so I did this channel down here. I still think this is the trend with Google. We had this weird, like, kind of pop out above it. This was after earnings. I think this may have been after the dividend and buyback and those types of things. We had this weird kind of euphoric pop out, which created a new higher high on the longer term trend. But we kind of sucked back into trend, found the middle of the channel roughly. We'll adjust the line to just make us look better and make us feel better. I mean, even though it's Friday, we got to feel good about ourselves. We busted out above this. I tell you what, with Google, a new higher high takes you to 201 on this one. So I know these stocks seem like they've gone on a monster run. Well, if that run continues, you've got a long ways to go with Google. Also, Microsoft looks destined, like it wants to confirm a new higher high. New higher high on Microsoft should take you back into the 470s, maybe even 480s on that one. That one was in the buying zone there briefly. Now, Tesla is in the most, obviously, the weirdest technical pattern, but we are like making a series of higher highs, higher lows. It hasn't been like perfectly confirmed. But with Tesla, I think you're going to just continue to drift up into that October event. And if they can deliver, then that could be the catalyst to push you back, I don't think, above all-time highs, because this is a long ways away. This is over $400 per share. But that could be the catalyst to finally break you out. The stock has not been above 300 since July of like 2022. So it's been several years since the stock has broken above 300. You have a solid event there. That is the catalyst, I think, to do it. If you have a poor event, a poor showing, kind of a sell the news event, in my opinion, it probably creates buying opportunities for Tesla because they have a lot of things going for it, including things that are not tied to electric vehicles. Folks, that was the FAANG Stock Recap Show for Friday, September 20th. Down into the description, there are links to the newsletter, new links to the new YouTube channel. Please subscribe and support us if you can over there. It is free of charge at the current time. Would love to see you over there. There's links to the social channels as well. Don't forget to like, share, and subscribe to this video as well. That helps us out and keeps the content free. Thank you for tuning in. Have a safe weekend. Enjoy football and family. That's what I do on the weekends. Whatever you do, I hope it's fun and safe as well. See you next Friday.